single-serve fancy feast petites are just for her. Just the right size, just the right gourmet.
Good morning, everyone. Beautiful Wednesday morning. My name is Steve Tabrizi. I'm Chief Operating Officer with the Remax Hallmark Group of Company. This morning, I will spend about 45 minutes to 50 minutes with you, sharing the first quarter real estate market update primarily in Ontario, and we briefly also touch with respect to Canada. Um, During the next 40 to 50 minutes, I will try to explain what has happened since 2017 going forward, covering the COVID period during the 2020 and also the first quarter of the 2021, and policies that may impact of a real estate market. Keep in mind that we will have a period of the Q&A at the end of a session. Please type in your question on the right-hand side of the chat box, and we will take a note and we will address all your questions at the end of the presentation. So let's start. So during this agenda, we will cover 5 key elements. First, we go briefly about the key metrics before the COVID, what happened to our market, what about the fear of the missing out. Then we enter through the first lockdown. Then we cover the Ontario exodus, and then we talk about the impact of the vaccine rollout. And then we will share with you what we think should be the solution with our supply issue and the market outcome in Ontario. So what happened perhaps just before the COVID, before the March of 2020? If you recall, sometimes around the end of the 2017, the federal and provincial government introduced speculative 15% tax. And the reason for that introduction, government for the last 10 years has been trying with the various policy to really cool down the real estate market in Ontario primarily and in Canada. And one of the steps and one of the measures that they took place was introduction of the speculative tax. Later on, early in 2018, also another measure was introduced, which has probably the most impact in our real estate market, which was a stress test. So from end of the last quarter of the 2017 to the first quarter of the 2018, there was a fear of the missing out in the industry. And most of that fear was among the buyers, that they perhaps assumed that was the perfect timing to re-enter the market because of the adjustment of the prices, and hopefully they can take advantage of the lower prices between the 2017 and 2018. And if you really pay attention, what happened from the January 2018 all the way to October of 2019, you notice that the percentage of the sales above the asking price was sitting anywhere from about 10 to 30%. Therefore, the market was a balanced market. It wasn't a seller market. It was a balanced and healthy market. Till we literally reached out to the point of the first quarter of the 2020. And as you notice, the percentage of the sales above the asking price, and there where you see the momentum was really picking up, and then the COVID happened sometimes around April. So what happened when the COVID happened? If you recall, around March 17 of last year, the Canadian market, Canadian economy, Canadian real estate, respectively, basically halted. And the result of that was because of the lockdown. And on an annual basis, in a Canadian real estate market, we do about 45 to 50 transactions on a monthly basis. In April of last year, 2020, we dropped almost by 65%. We accumulatively did about 16,000 transactions. And it was interesting, during the month of April and May, although the number of the transaction dropped, which was basically the worst April in 36 years in the Canadian real estate market, but the prices did not drop that much. The prices, with the exception of the certain areas, Alberta, primarily Calgary, St. John, and Edmonton, the rest of the country, they sustained their prices. In GTA and Ottawa, the two areas that Remax Hallmark primarily also focus, we noticed that the prices actually, they had a slight increase too. So, and we also monitor what happened during that period. We look at the percentage of the sold versus listing, because that's the indication of the, are we going through the seller market or the buyer market? As we discussed with the previous slides, if you take a look at of the January of the 2020 all the way to the March, we will picking the momentum of increasing of the percentage of the sold versus the listing. In fact, in February of the 2020, we had one of the best February in the last 10 years. Almost 82% of the listing they were selling as soon as they were hitting the market. The inventory, in fact, in the first quarter of the 2020 was less than about a 2.5 months. So lockdown happened. And if you look at the graph, you notice the number of the transaction drastically dropped to a point of almost minus 73%. So basically, if there were 100 transactions was happening on a monthly basis, we were doing at the capacity of the 30%. And slowly from the April to the June 1st, which is basically the break-even point, we start picking up the momentum again. What happened during those 2 months? The 2 months of the uncertainty, and the 2 months of the uncertainty basically caused among the consumer, should we re-enter the market? What is happening with the employment? What is happening with the government support? And sometimes around end of the May and the beginning of the June, we noticed the rebound of the market. Why the rebound of the market? Canadian government, particularly the federal government, was quick to act. What happened in an economy? In an economy, only crashes when you take away the cash available on the cycle in the market away from the consumers. So if you take away the power of the spending with the consumers, therefore the economy will crashes. So federal government reached out by introducing stimulus packages, by also securing the mortgage bond through the Canada Mortgage Housing Corporation with the banks, and allowing the bank that they have the ability of the lending and providing loan and mortgages, so the activity of the economy, of activity of the goods and services could happen. So the rebound started sometimes around the June 1st. One of the other key element in the rebound was the employment. So the government introduced the wage subsidy, which was a big, major help for employers that they could sustain their business and continue their businesses. And we noticed the majority of the job losses, sometimes around the May of the last year, we reached at the point of almost 13.4% unemployment rate. We had almost 3 million Canadian, they were unemployed. Keep in mind, we enter COVID with only 5.5% employment rate, which was representing about 1 million Canadian. The other 2 million Canadian that they were unemployed for a short period of the time and uncertainty, that was the actual true lockdown. The first lockdown was an actual true lockdown. Today, as we are speaking, we are on the third lockdown in the last 14 months. But if you pay attention to this graph, you realize the majority of the job losses were on the lower income earner versus the higher income earner. So primarily in the range of about $14 to $27 per hour. This group of people primarily are the rental holder in our real estate market. They are perhaps thinking about entering as a first-time buyer. So therefore, the major impact in terms of the unemployment wasn't really a major blow to the real estate market. So that was one of the biggest factor that really allowed the confidence within the Canadian re-enter the real estate market. So you got the wage subsidy, you got the unemployment, which is around about the low earner people, and also you got the stimulus packages from the government, making sure that the bank, they will go and start lending. Another major factor was the low interest rate. So 5 years rate, sometimes prior to the COVID, was sitting anywhere from about 2.75 to 3% rate. Suddenly, we went to the bottom rock, Bank of Canada's rate, and the 5 years mortgage rate are sitting anywhere between 1.5 to 1.7. So the affordability and the purchasing power of the consumers suddenly doubled. And that's the result that you see, what we call it mass exodus of the people from the urban center to the rural area or the suburban areas. So why that happened? So who are the purchaser or primarily buyers in our market currently? If you recall, before the COVID, we talk about it in 2019 and 2018, millennial, they were complaining that they never can be a homeowner in Canada, and they were complaining and they were forcing the Canadian government or provincial government to introduce policies to really derail or slow down the hot real estate market. Who are the millennial? Millennial are the individual that they're the oldest group, that they are about 39 years old, and average is about 30. They have great job, they have highly educated, and they are, majority of them are at the point of the forming a family. So this group now realize is the best offer. This group literally realized that what they were thinking about 2018 and 19, and they were expecting that the market will go down further, didn't happen, because the market only have a slower portion, almost about 18 months, and it was only a drop of the prices of about 13%. But the comparison of those prices was versus the first quarter of the 2017. It wasn't that the prices were dropping on an annual basis by 13%. And from the last quarter of the 2019, beginning of the 2020, the prices started picking up the momentum. So these individuals, they realize this is the best opportunity for them right now. They couldn't afford to be in a major urban center such as Toronto, Vancouver, or maybe even perhaps Montreal. They decided, okay, let's exit the major urban center and let's go outside. Why go outside? Their purchasing power was much more higher, lower interest rate, and the prices, perhaps sometimes in the second or third quarter of the 2020, wasn't as high as it is today. So there was a huge difference between the mega urban center prices versus the suburb area. Abacus Data is one of my favorite firms that they do constantly survey. And if you take a look at this survey, look at the age group, anywhere between 18 to about 44, majority of the people, 36% to 29% respectively, they said yes, they will move to a smaller community. Another factor that really encouraged them was working at home. So as we mentioned, this group of the people, they really hold great job with the above average family income, and their companies allow them, due to the lockdown, to work from home remotely. Where do usually they work? They have a professional jobs. They are with the financial institution. They are with the big corporation. They're highly skilled and highly educated, and most of their job can be done remotely. And also, these people are highly educated, as you can see, 29 to 21% college and university degrees they hold. So what was their thinking of these millennials? 63% of them, they said they are purchasing a home because of their ability to work remotely. 49% of them, in a survey shows, reported COVID has pushed them to buy a home sooner than original timeline. Why? Because they noticed that opportunity with the interest rate. 68% of them reported that the shelter in place, others helped them save for their down payment. So you see the momentum and motivation is been there based on these survey among the millennial. So this is also shows in the 2020, the almost 2/4 or the 3/4 of the 2020, what has happened in terms of the share of the purchasing of the buyers and seller by generation. If you take a look at the older Gen Y millennial, 23%, and Gen Xer almost 24%, plus also the younger Gen Y, almost 14%. So you literally have almost about 60% of the younger generation below 45 years old that they were in the market of the buying. And you will see also the higher generation of the seller among the older boomers or younger boomers or silent generation. They were basically on the opposite side. They were downsizing. They were saying, do we need such a large home that we have right now in a mega urban center? Maybe it's time for us to downsize and cash out and basically look after our retirement plan. So overall in Canada, when the survey was done, 31% of the Ontarian, they said they do not mind to move to suburban areas. And they do not mind to work from home. So 45%, the share of our purchasing of the market, if there are 100 buyers last year out there, 45% of them were, which is a huge, which is almost half of the market, they were in the age of between the 25 to 35. 25% of the home, and 29% of those 45% that the survey was done, they purchased their home last year, since last mid-March. And the rest of the survey also shows that 66% of them that is still, they don't own the millennial home, but they are planning to buy a home within the next 5 years. So let's take a look at what happened in the GTA housing market. So we are looking at the transaction for the first third quarter of this year versus the same period of the last year. We had an increase of the transaction by almost 95%. We had an increased prices of them by 22% in the GTA market. So prices literally reached to almost about $1.2 million. And the transaction, we will talk about it on a later slide, but almost doubled. If you break it down to a different segment by the prices, by the type of the home, you will see literally beside the condo market, which we'll talk about it, what happened to the condo market, semi-detached townhouse and detached, they had a double-digit growth, and the number of the transaction almost accounted for 15,000 transaction in the month of the March versus the same period last year, which almost about 7,500 transaction. What happened in Ottawa market? Very similar behavior, 50% increase in activities and 31% higher in terms of the prices. Why much more higher prices in Ottawa versus the GTA? Because Ottawa was still among the most affordable, perhaps we should call it now, semi-mega urban center, because it has surpassed the million population. So the average prices still in Ottawa was much more affordable versus the GTA or Vancouver area. And we noticed major interprovincial migration from the city of Toronto, Calgary, and Vancouver to the Ottawa, not only for the point of the affordability, also for the employment, and also for the having the amenities that many residents they require, such as hospitals, such as schools, such as accessibility to large urban centers such as Ottawa, such as Vancouver, such as Montreal and Toronto. So look at also the breakdown of the prices. The single family detached home had the biggest increase, 36%, and the condo had 18%. Why the condo market performed much more better in Ottawa versus the Toronto? Because the diversity of the type of the condo market in Ottawa is a lot less than the Toronto, and the size are bigger. So many some entry-level people that they are coming from a rental that they want to go to the housing and purchase their first home, they basically had the affordability and ability to only enter to the condo market. So, and the limited inventory of the condo market. And the transaction is picked up also by 50% in the Ottawa market. Another area that the Remax Hallmark operate in 5 regions. The GTA, which consists of the Toronto, York, and Durham. We talk about it, Ottawa and the Simcoe County, and all the municipalities within the Simcoe County. What is happening in the Simcoe County? Simcoe County by far has become the hottest spot in Ontario. Why? If you take a look at the Simcoe County, the proximity to the Toronto, it's only about a 45 minutes drive to the Simcoe County. In the last 40 years, had a population growth of the 560% consecutively. And it's one of the areas that the shortage of the land scare effect does exist. Why? Because on the easterly boundary is covered by the Lake Simcoe, and on the westerly boundary is probably the biggest green belt, untapped, protected area. So there is a very small area which is currently potentially has a development opportunity. Population age, younger generation are representing almost 30, average age in Barrie is about 37 years old, and it's about almost 29% of the population are the younger generation. Commercial growth, it's basically growing on a steady basis. Plazas and also movement of the many smaller businesses, medium-sized businesses, their hub or their office centers are being in Barrie, Ontario, because of the close proximity to also GTA. Another thing that we notice with the Simcoe County, talking about the land scare effect, if you take a look at it, there are 26,000 hectare of the unbuilt land in outside of the ring of the Golden Horseshoe, and 38% of that land is in Simcoe County. Unfortunately, this is one of the also this mismanagement of the policy of the green belt, the allocation of the green belt and allocation of the unbuilt land since 2006, that has been the official planning act for the green belt has been done. Only 20% of those land is being used and developed. The rest of those land still is untapped, and that has caused the increase of the prices also in the Simcoe County. And what was the performance of the Simcoe County? The performance in the Simcoe County, the prices went up double digit, almost by about 21 to 25%, and activities they were up by almost about 34%. So what happened also in March of this year? In March of this year, the government reopened the economy. So we came from the state of the gray lockdown zone to the red zone. And one of the effect was opening the retail businesses, restaurant, and mainly the indoor malls. And if you take a look at it, what happened in the month of the March, the employment rate suddenly went up to almost about 61%. So we had almost about 300,000 Canadian and almost about 200,000 Ontarian that they basically recovered their job. Right now, the unemployment rate is sitting, as of today, is sitting at about 7.5, from 13.5 to 7.5. So we only have about 2% more to basically recoup to be in the position of the where we were before the COVID, which was about a 5.5%. So again, by sector, if you take a look at it, still we have to recoup about 300,000 jobs, which are mostly in accommodation and food services. In other areas, professional science, education, you will see we had a positive net gain in most sector. So, and the robust consumers spending in the month of March was the indication of the employment rate, because people started spending their money. And if you take a look at from the January to almost March, you will see the positive growth in the spending and the early sign of the recovery, which really demonstrate that everyone is really eager to reopening of the economy, and consumers, they really have built up about 9 to 15% saving in during the last 14 months, which at one point they really want to spend that money. Some of them, they are saving, they've been very smart to spend it in adding to their down payment and purchasing their home. Some beyond that also, because we are the ability from all of us to take in a way that go out there, socialize, go restaurant, go travel, do the shopping the way we used to do, celebrate. So that basically has helped us to build excessive cash, but at the same time, the consumers are eager to spend that money. And when the consumers go out there and spend the money, they create transaction. When they create the transaction, the cycle of the economy continue and will grow further. So as we discussed what happened in the Simcoe County, if you look at a year to date, March compared to the same period last time, you will see the total Simcoe County transaction is almost up by about 34%. And if you take a look at the prices, you will see almost up by 30%. So last year, around the same period of the time, an average house was worth in Simcoe County about 530. Now it's worth about 750. So now the gap between the prices of the suburb and the mega centers such as the GTA or Toronto is shrinking. And now with the next slides, we will explain to you what will be the effect of when the gap shortening. So Canada, for the first time, every time the news and the media talk about the Toronto, Vancouver, and Montreal, but for the first time across Canada, everything was on a positive gain compared to the percentage of the changes of the 2020 versus 2019. And obviously the biggest gain has been Ontario. And after that. The average in Canada has been about 13%. And Prince Edward County, part of the Ontario, which was part of this study, had a 19% growth. And why the cottage area and rural area, they had one of the biggest growth? That's for the segment of the baby boomer that they basically have built a huge equity within their real estate portfolio and investment, and they basically either are downsizing or cashing out, and it's really pushing the price of the cottage countries, because now they are realizing they can live in many of these smaller community is much more safer, and the effect of the COVID is being less, and also they can easily travel to the big center in terms of the facilities and the health support that they need. So Canada's top 5 urban centers year to date: Ottawa. Ottawa is the number one urban center in Canada, had an average of about 14.9% increase, followed by Montreal, Toronto, and Vancouver. Interestingly, about 2 years ago, Vancouver was sitting number 1 and Ottawa was number 3, and Toronto was number 2. Now Toronto is sitting at number 3 and Ottawa is at number 1. A complete shift towards the smaller urban center, such as Ottawa, such as London, Ontario, such as Hamilton, and even going towards the eastern provinces, Halifax. They had a really great momentum of the growth in those areas too. So top 5 community or smaller cities within the Ontario, Markham had the highest home price increases by almost about $130,000. Vaughan, which is both Markham and Vaughan are a northern part of the GTA, and 132,000. And then going west, Burlington, and then east, Pickering, and then Oakville also it's had a great momentum of the growth. As you can see, all the 5 cities, they had over $100,000 price increases year to date. So the urban exodus, is it a long-term effect? Yes or no? If you take a look at the Toronto as an example, you can see, or Oshawa as an example, or Ottawa, you will see the gain of the inner bound of the migration towards the population. The key is not the number. You take a look at here, the Toronto, you will see is a 92,000 versus 6.5 million population. So the percentage is very small. But when you take a look at Ottawa as an example, 23,000 versus a 1 million. So the ratio is a much more higher. Or Oshawa, 8,600. This graph really represents although there is an inbound effect that people are coming back to the larger center, they want to live in a larger center, but there is also a very gradual growth going to the suburb area. Is it going to be a long-term trend? Yes, but it won't be at a mass exit that we noticed during the last year. It will basically become the option and the choice of the consumer. Do they want to live in those areas? And it's all subjective to their employment and the ability if they can work remotely from home, yes or no. And perhaps the new model in the future, after hopefully the COVID will subside and we can go back to the normal, will be the hybrid model. Many employers probably will offer the hybrid model, meaning 3 or 4 days working from home, 1 or 2 days working remotely, because also the study shows that the efficiency and the performance of the employees working from home is not the same. And also for mental and emotional stress, it's been proven that the employees and interaction, learning and growing their skill set is much more faster at the work environment versus when they are at home. So work from home forever or not? If you take a look at it, you will see only a small portion, which is this line, 20% of the population, really, they basically explain that they really don't mind to work from home completely. And majority of the people really are dying to go back to work, which was interesting. At the beginning of the COVID, this number was completely reversed. Perhaps consumers are feeling more confident with the system, with the physical distancing, with the measure that took in place, and also the feeling of the stress working at home, and the mental and emotional stress that has caused them is really changed their mind that, as we explained, they would love to have that hybrid model available to them. So let's take a look at what happened in now. We're going to talk about what's going to happen down the road and in the future within our market. Because the $1 million question right now is this. The government, just as you know, recently the OFC uh, added or expanded the stress test. The stress test is a 2 point above the bank rate, which was sitting at about 4.79. As of June 1st, the proposal talks about 5.25, which basically increase the expansion of the qualification by 0.45, which will also decrease the ability of the qualification by about 4%. So if a house worth about $500,000, you can only qualify as of June 1st for 480. But let's take a look at it. Is this new measure going to slow down our market in a long run? Yes or no? Let's take a look at first what we are missing right now in our market. We have such a robust and hot market without this particular element, which is immigration. In 2019, if you take a look at it, we had almost 8 million people travel to Canada for visitors. Believe it or not, Canada is the number 2 country in the world for tourism after Italy. 5.8 million people come to Canada on a yearly basis. 404,000 people are temporary worker or student visas. These people right now, they are studying remotely, or their visas is being revoked because they are now moved back to their countries. So many of them are right now actually signing a petition, particularly the student, that they want to come back, and they are asking the federal government to remove the 3 days quarantine at the airport. You got also on an annual basis, almost about 75,000 of the 400,000 people that they were here for temporary people. They said, okay, I have decided to choose Canada as my home and live here forever. And we got also 341,000 people that they applied through the immigration policies and also refugees policies and everything. And now this policy has been expanded for the next 3 years to 1.2 million people. So any measure that the government is going to bring into the place, it has to impact the supply, because you cannot weaken the demand when we have still close to about probably 500,000 people waiting behind the borders and they want to get to Canada. What's going to happen? These people, they need a roof, they need a rental place, or they need a place to purchase. So this is also a survey was done by the Board of Canada, and it talks about from the 2020 to 2024, what would be the international migration to Canada. Canada, although many people, many Canadians are criticizing the federal and provincial government in terms of the vaccine rollout and the inability of the government as to vaccinate Canadian efficiently, but still the international eyes is on Canada. Everybody believes that Canada overall has done a great job compared to the other country, particularly our health system. Yes, we have 500 or 600 people as of today in ICU centers, but overall, our frontline workers have done a tremendous job, and our system has worked and has protected the Canadian in the last 14 months. It's not been a disaster. We never had any of those stories that we see on the news from the global market in terms of the mass mortality rate. So this group of the people, the green, they're looking at coming to Canada. You will see also interprovincial migration going to happen. So we cannot take away the effect of the newcomers and immigrants coming to Canada. So vaccine, yes, everybody is blaming Canadian government in terms of the vaccine rollout. Maybe this is just a comforting for you. I'm among those individuals that I was, and I'm still blaming the government in terms of the vaccine rollout, not because of the efficiency of the supply. I think because the way it was rolled out, the system could have been a lot better. The inconsistency of the portal of the booking the vaccine appointment. There are multiple portals that they don't talk to each other. But if you take a look at the G7 country or G20 country, beside the United Kingdom, which as of this morning is sitting almost about 60%, and then US, Canada, interestingly, as of last night, this report has not been updated. As of last night, it was on the CBC. We're sitting at about 22% of the population they received their first dose. And why UK and US are further ahead of us? Not because of their system, because they basically have right to the manufacturer. One of the failure of the Canada that many years ago that unfortunately didn't look at it and didn't really bother to invest was a vaccine facility. Hopefully the Montreal vaccine facility, the Quebec vaccine facility will be up and running in October. And there is also talk about a $950 million investment with a French company to build another vaccine center in Toronto. But overall, we are not doing a bad job, and we hopefully should build this momentum for the next 30 to 45 days. Another factor that you have to keep in mind, US started its vaccine rollout from January 9th. We started our vaccine rollout efficiently to some degree, I would say, at least having decent supply from almost about mid-February. So we were behind by 45 days. So if we have reached almost half of the capacity of the US is, as of last night, is about 55%. We are 22%. Well, we haven't done a bad job. So have some faith, and hopefully we will get over this bump too. So inventory insanity. So what's the problem with our market? With our market is the inventory. And this problem is been neglected since 2005. The 2005 official plan talks about the percentage of the allocated of the land that should be allowed for a development. So we are basically beside 2015 and 2016, which we actually did a great job in a condominium project, not across Canada, only in Toronto. We are basically failing in terms of the building affordable housing. And there are multiple factors. Obviously, the process of the approval, obviously, the inconsistency of the Planning Act among the cities. And then we were caught in during the COVID by the demographic shift. We never thought the millennial, they will suddenly wake up in the early March of the 2020 and just say, okay, this is the year, I got to take advantage and buy it. So our short-term issues really caught our long-term inability that we should have basically thought about the Planning Act. And this will not going to go away soon. Rest assured, this has been a big talk among any province, any election, provincial or federal, and everybody promised to do that, but it will not going to happen soon unless the government provides subsidy and support to a developer. A developer only develop an affordable housing if the rate of return in terms of their initial investment makes sense. Right now, you are in an era with the cheap money, low interest rate. Low interest rate only doesn't apply to the consumers and the end user or the residential mortgages. Developer, they have the same privileges, maybe at a different category or a different rate. And when they see the rate of return with the high demand that they are paying the top dollars, do you think they will build affordable housing and collect rent with the ROI of maybe 5 or 6% versus the ROI of the 25 to 30%? Unless the government provides subsidies, unless the government invests with those individuals and those firms, it will not happen. The government also is sitting at almost 6,200 parcel of ownership in Ontario, mega parcels, mega properties. They have the opportunity to convert them to affordable housing, but they don't do it. In few years ago, they actually started liquidating some of their asset because they couldn't keep up with the maintenance. And is interestingly, instead of they spend that money on sort of refurbishing those properties and make them an affordable housing, they rather sell them to the developer. And they created a policy that within every towers or within every development, affordable community housing should be allocated. but proportion of that percentage of the allocation, it's less than even 1% of the total unit or total houses that it's been built. So this problem of the inventory, it will not going to go away. So how can we fix this problem? We have a supply issue. We talk really in details about the supply issue. And the supply issue, another area, we have almost about in inner circle of the GTA and outer circle, they call it in a planning act, there are almost 98 to 95% of the land is designated as a green belt. Do we need that much green belt? Can we come with the policies that keep the green belt, but also built in within the green belt with the certain requirements? Development policies. We don't have uniform development policies. One builder will take a 80-story towers. One builder has the ability to get a 40-story towers. We need to have the uniform planning and intensification policies. Why? Because the more in density a developer gets, the more profitable project is for them with them. But that also has a ripple effect on a set sale price of the land. The sale price of the land goes higher and higher. I'm in the big, excuse me, I'm in a big favor of the policies to discourage speculative activities. Yes, we want to encourage investors to come into our market, but some of the investment policies that we have, speculative policies that we have, is getting out of the control. They were all over the news. You will see the people buy a property 5 months ago and they flip it and they're making 300% profit within the next 4 or 5 months. We recently caught and noticed these activities, and they have introduced certain tax burden on those speculative policies, but I'm sure they can do much more better. How about the first-time buyers? Why are we burning the first-time buyers similar to somebody that has multiple properties? Why a first-time buyer, for example, in the GTA should pay the double land transfer tax? Why we are not offering a better program for a first-time buyer? Mortgage policies. Yes, the stress tests, many people are not happy about it, but frankly, we have to think about the future generation. If we don't have defined policies and definite policies, we're really taking the ability of the home ownership from the future generation. And the future generation will be on a massive stress. They never be a homeowner. They have to go further and further away from the employment center to buy homes. So the mortgage policies it's not the stress test. The mortgage policies should apply on the also scaling formula of the minimum down payment based on the multiple properties that you're going to have. Not to take away that somebody has 3 or 4 properties, now suddenly a massive burden on them that they have to put maybe double the down payment, but I'm sure we can come up with the policies that basically it will provide opportunities for investment, and it also will provide for opportunities for the end users. So challenge that going to lie ahead for us in terms of going to this market. Will the rebound in the condo markets will continue? Absolutely. What happened in the condo market? So COVID comes, lockdown, and now suddenly many renter that they were among the millennial, we talk about them, almost 62% of the current millennial, they are saying they were buying in the last 5 years. So they vacant their property, they moved to the suburb area. So you got that. You got the effect of the foreign student that they left the country. You got the effect of the newcomer that typically for the first year they rented. So what happened to the condo market? Condo market prices dropped for up to probably October of the 2020 third quarter, but another massive drop. And then suddenly in the last quarter, to everybody's surprise, they notice is rebounding. Why it's rebounding? The gap of the price of the suburb versus the price of the urban center, it was closing. If a townhouse used to cost, let's say in Toronto, $1 million or $1.4 million, and used to cost in the suburb in early summer of the 2020 for six or 700,000. Now the same townhouse, it's worth about $1 million in a suburb, and in Toronto it went up maybe by 100,000. So people are saying, okay, I can't afford that townhouse in suburb anymore, so I better re-enter back into the market. And we see the massive spike in our condo market, particularly from investors. Any financial crisis, any global crisis create opportunities. An investor in Canada, in GTA, in Ontario, they see that opportunity. Why not? Let's take some of those condominium of those people that they really are stressed out and they don't want to carry. So the condo market will rebound, and you have noticed also massive launch of the project within the GTA, even within the Ottawa and a Simcoe County. It's happening all at a different price point. And now the buyers are also recognizing, okay, maybe even if I can't buy a house in Simcoe County or Ottawa, maybe at least I should enter a condo market. Is money going to be cheap for a long period of the time? At least I can assure you the money will be cheap for sure till next 12 to 18 months. Why? Canadian government, they are very preoccupied right now on handling the vaccine rollout and making sure the economy can reopen. We noticed what happened in the economy when they reopened it in March for almost 3 or 4 weeks. A massive spike in the spending by the consumers and the growth in the employment rate. So they really don't want to derail. They really don't want to cause anything that can take the momentum of the real estate market. And bankers and economists are blaming the federal government with the cheap money that is actually causing heated market. Let's not let's realize that basically 25% of the Canadian GDP is around the real estate transaction. Real estate transaction is not only a buying and selling a house. It is the finance industry, insurance industry, renovation industry, construction industry, sales of the goods, furniture. It's almost about 70 other industry are related to the real estate transaction. The money will be cheap probably till next year. And I'm predicting that the next year, we probably, if we get out of this vaccine rollout efficiently, we will have a federal election. It's happening. Will the expansion of the stress tests cool the market? I will talk about this point at the next few slides. But I want also to bring to your attention the investors and the developers, they just don't invest in a city or in a country for just the sake of the investment. They have massive research studies from the immigration, from the employments, from the availability of the cash and untapped money in the market, and they do the investment in those countries. Study by Ritter Lavelle, that it's a construction consulting firm, shows that Toronto is the number one again with the crane. 208 cranes in Toronto. Unfortunately, there is no report in terms of the Ottawa or Simcoe County, but 3 weeks ago when I was in Ottawa, you could see at least probably about 30, 40 crane also in Ottawa that is happening. So this is the confidence of the developer, which they spend on every towers, probably about $250 to $300 million investment. That's what they see the confidence with the Canadian market. So this is the question about the stress test. So look what happened during the 2016 and 17 when we introduced the stress test, when we introduced the speculative tax. And when we introduced it, that was the bubble period. If you look at the area from probably January to April or June of the 2017, the prices were going up on a monthly basis as high as 43%. Then we introduced the stress test in early January. We only saw a drop of about 13% into the market. And the 13% into the market, really what happened, the inventory never went surpass of the 3.5 or 4 months, even during those periods. And that's a good sign. We were in a seller balanced market. We were going back and forth, back and forth. But the consumers, they make a big mistake. They said, oh, the prices drop by 13 or 14% during that period of the time. So the stress test is going to work. But in correlation to what point? 13% drop in the prices was compared to the peak of the 2017. It wasn't compared to the last 5 years of the market. If you take a look at the last 5 years of the market, the inventory and the prices, even the lowest drop during that period was still higher. And then we start building the momentum again back around the October of the 19 and going onwards. You see the inventory drops. When the inventory drops, what happened? The prices goes up. When the inventory drops, basically you got less supplies and you got still the demand is out there. So the argument of the new stress test, what's going to happen? It will create a very heated market in a short period of the time before the June 1st. What's going to happen after June 1st in correlation to the first 4 or 5 months of the 2020, maybe you will see a 4 or 5% adjustment of the price. But I don't think this time going to happen because we don't have the element of the immigration which we had in 2019. So we got a massive demand is sitting behind the door. And also another factor that we had it in 2019, but we don't have it now, is the consumer's confidence that going out there and spend the money. We were in a normal circumstances. People pulled back for about 12 to 18 months. The prices that are adjusted by about 13% at the highest, anywhere from about 7 to 13%. Now we got two major factors. The major factor is I want to go out. I want to go dine out. I want to travel. I want to spend the money. I want to do the shopping. I want to basically go exercise what I missed for the last 14 months. And then the border will open and people will start coming. Those 5 million tourism, those 400,000 immigrant that it will coming. So the inventory still will be low. So I wouldn't really worry about the stress test as much. So if I know on this call today, there are many clients of the Remax Hallmark agents are watching. If you are in the market to buy, buy. If you are in the market trying to sell or downsize, it depends on all your motivation factor. So talk to your realtor and basically they will guide you through this process. You got to remember the real estate is a long-term investment. Whoever holds to their properties, even that they bought at the peak of the 17, they made the money now. Look at it, 17 to now, it's about 3.5 years. Usually a cycle of investment is about 5 years. So investor risk and opportunity is Canada. Why Canada is always on the top of the map? Hardly any political risk. Yes, we got government, minority government, but we are not a nation of the really an unorthodox political platform. Everything is predictable. Currency risk is very low in Canada. Canadian dollar always hover anywhere historically, with the exception of the 2010 and 12, that was at par with the US, is always hovering around the 75 to 83 cents. Tax and regulatory environment has been very stable. Yes, we are one of the among the highest tax nation in the world, but with that come a price of our health system, of our regulatory issues that really have helped us to navigate through major financial crisis. And the most recent one was 2008 in US, when the stimulus package from the federal government in the US came late and the real estate market crashed. Both in 2008 and during the COVID, the stimulus packages, and they called them quantitative measure, they came from federal government very fast. And the number one quantitative measure was giving the confidence to the bank, to 5 major banks that do not stop lending and make sure the access to the cash to the consumers is available. Canada's growth and stability, the GDP probably, if everything works out and reopen, the expectation was the GDP will be almost about 5% positive this year. But because of opening and closing, perhaps it's going to be on a positive gain, but not as 5 or 6%. Plus also the growth, Canadian growth and stability primarily relies on the immigration. The immigration, they bring investment, they bring funding, they bring the stability in terms of growing a family here, and the children, they stay in this country, and they basically create their own families, and they buy properties, and they buy goods and services. So let's take a look at the Hallmark performance versus the industry. The most important performance is the ratio of the sold to the listing price. In Toronto, or GTA, what we call it, which is consists of the three region that we service through our 11 offices, Toronto, Durham, and York, Hallmark agent listing, they were sold by 3% more than the average of the industry market. So the 3%, if you want to put it in the perspective of the dollars, average price right now in Toronto, in GTA, is about $1,000,001. At 3% represent almost $33,000 more money in the pocket of our clientele. In Ottawa, similar performance by almost 1.62, close to 2%. Sorry, this is not Ottawa, this is Simcoe County. That the Simcoe County performed better than the BDR board. Average price right now, as we talk about it, in Simcoe County is about $700,000. So the 2% is represent another $15,000 gain in the pocket of the consumers. In Ottawa, almost about 3%. Ottawa prices is sitting at about $800,000, $24,000. And the performance of our agent is purely based on their skill set, their knowledge, the network of the Remax Hallmark, the accessibility of the listing. We are a company that primarily goal by having almost 60% of the listing in Ontario that we practice, in those areas that we practice. And we represent last year about 23,000 transactions. Every 21 minutes, we do a transaction, a volume of about $13.5 million. So fun facts for the first quarter, we had almost about 5,300 listing. We had about 125,000 booking the appointment, and our average sold to list price in all the region is sitting at almost 110%. Total appointment books almost about 126,000 appointment it was booked. So how the Canadian, they feel about the market. This is the last slide that I'm sharing with you. If you take a look at it, 26% they think the prices will rise slightly by 10%. 21% they said the prices will be the same place it is. And 14% they think the prices will go up by 30%. 17% they said the prices will fall by maybe 10%, say around 10%. Only the last segment, 22%, they think the prices goes down by 30%. If you take a look at the first three, majority of the Canadian population, they believe the real estate market is healthy and it's not going to go away. Is it a good news? Of course, it's a good news. Is it a bad news in a long run? Do we need the overheated market? Absolutely. We don't need an overheated market. But unfortunately, unless we address the supply issue, we cannot overcome this matter. The supply issue is going to continue for years to come. But the good news, one thing that happened right now during the COVID, during this exodus, and during this interprovincial migration, which wasn't happening during only the COVID, it happened almost in the last 2 years. Now, other major urban centers such as Ottawa, such as Simcoe County, such as Barrie, such as London, Ontario, Hamilton, they really discovered their new price point. We are not going to go back to the prices of the 2016 or 17 in Ottawa or in Barrie or in London, Ontario, when the prices were sitting around $500,000 for a detached. If you're sitting around $700,000 or $800,000 right now, even with the moderation or adjustment in the market, you will see a new price point of the maybe $650 to $750. So you're talking about maybe 5 to 7% adjustment. So that's a good news for the expansion of the economy to those cities. And rather than concentrating an economy in Canada only on 3 cities, Vancouver, Toronto, and Montreal, we really need to flourish the other cities that they are in this beautiful province and the beautiful country. And this is one of the ways that is happening. real estate is forcing people to migrate to those areas, and by force of the real estate, the job opportunities also are presenting themselves in those areas. I hope you enjoyed this presentation. I will be here to answer any of your question. I'm all yours. Shant will read any of the question, and we will answer to the best of our ability that we can.
Awesome, Steve. That was great information. So we have our first question, and it comes from Thomas Merkovich, which he asks, what are your thoughts on people wanting to come back to Toronto once life returns to normal? Toronto GTA companies tell their employees to return to the office from their home office. Do you think there will be another demand to come back to Toronto, or will those who moved out be out of luck for getting back?
There will be, okay, this question is two-part. There will be for sure a demand coming back to Toronto because some people, and the demand won't be from those people who moved out of Toronto. Those are older millennial. The younger generation, Generation Z, they call them, they are going to be the new kids in the block that they're going to enter to the market. And guess what's going to happen to them? Those people will enter to the Toronto market, that buy mostly condominium market. What's going to happen with also the workplace? There is a huge discussion in the industry. Okay, with the brick and mortar is going to lose its effect, and we're going to have people work remotely. No, the ability and the efficiency and the performance of the employees, unfortunately, at home is not the same from the work environment. And in order for the employers to prepare themselves to build a hybrid model and adopt the new culture, it won't happen instantly. It will happen over the next probably course of 3 to 10 years. The companies, they have learned that they have to be prepared to diversify their workforce and where they have to be allocated. So we will have the mixer of the both. There will be the people who bought in the suburb area. They probably will make some arrangement of the hybrid with their employers, and the employer we probably will also adopt to that possibility because they basically want to be on a collaborative mode. It's interestingly, finding quality people are really now becoming an issue in Ontario and in Canada. And the reason is a lot of people are upgrading their skill set. A lot of people are really looking for a better job and a better growth.
Great. Next question comes from Cameron Levitt. Do you think that at least some price acceleration is due to currency devaluation because of central banks' action increasing the overall money supply in 2020?
Well, no, it's mostly to lending practice. Just do the math. Before COVID, a 5 years mortgage was sitting for us after the proper approval, sitting at 2.5 to 2.75. Right now is a 1.5. So your increased ability and power purchase is gone up by at least about 30%. And those people who bought in a 3/4 of the 2020, they really took advantage of that. And the people who are buying now this year, they are taking still advantage because the price of the suburb still is lower than a central core or the bigger cities. And but it's not about the currency. Canadian currency for the last 5 years is performing anywhere between 78 to 83. I don't see any relevancy with the currency.
Okay. Next question from Dave Williams. Based on the idea of a K-shaped economy recovery, do you think a flood of lower priced property sales may give the appearance of a sliding average sales price in future stats?
I don't think so. We're going to be flood of the lower price properties. Canadian, they have a good equity in their properties. Canadian, by average, they have over 26% equity built up in their properties. And now those that they purchased longer ago, or they purchased even before the COVID, they built up that equity a lot faster in those properties. So I don't see the Canadian, they're going to flood the market in the scare tactic that, oh, the price is going to drop. The question becomes, if you want to sell, where you want to go. And if there is going to be a situation of the inventory, I don't foresee that issue that's going to happen in Canada. That issue happened in US because if you recall in 2008 and 2009, the banks, majorly private banks in US, they basically qualified anybody that who could breed. They call them ninja, and basically no income, no proof. You got a mortgage for 100% the value of your home. The regulation that we have in Canada in terms of the mortgage stress test has saved us for the last 20 years. And it will save us down the road going forward. And CMHC insurance premium that everybody was complaining about it, CMHC is a very rich tap that basically has saved the Canadian real estate market years after years. And during the COVID was one of those elements that gave assurance to the bank through the mortgage bond that basically lend properly. And also, if you think about the stress test, overall, it's a good measure. We talk about the interest rate. Is it going to go up? Yes, eventually it's going to go up, but maybe mid 2022 and later on. And if it's going to go up and we go with the pre-COVID scenario that the mortgages are going to be at the rate of the 2.5% to 3%, everybody is getting approved right now at the basis of the 4.79 and soon at a 5.25. That means they can afford up to that monthly payment of that rate, which is a really good buffer for Canadian. So Dave, I don't think so we're going to be flooded with the low properties, and then basically it's going to impact the rest of the market.
Okay, next question. Actually, I think it will relate to a lot of our realtors. It comes from Karen Elliott. She's asking, do you list now in York region or as soon as the lockdown ends?
I will list the listing is irrelevant to my opinion, to the lockdown. Even if the lockdown ends, this is now discussion about the medical and the science around the vaccine. I'm not a doctor, but what I'm reading, which makes sense, we need to get to the herd community. And herd community meaning everybody at least has their first shot or to some degree their second shot. This virus is going to be with us for the rest of our life. The vaccine is not going to protect us permanently. The vaccine, it will give our body an immune sense. So your question more related, if you wait till the lockdown is lifted, so you will have more exposure to your property or more confidence in the market, I don't think so. It has any bearing right now on that. Right now, if you got a good property, good location, York region is one of the hot spot. As you notice, Vaughan and Markham are the two primarily that basically are a leading indicator in the entire province in terms of the growth, meaning the Aurora or Richmond Hill are not that far. So I would list and I basically follow the protocol of the showing properly, and I make sure that basically find also suitable purchase for that seller. Also goes back to the motivation of your clients, Karen. What is their future plan? Are they selling, going to rent? Are they selling, downsizing? Are you selling, going out of the area? So there are so many questions that you needs to be handled and managed, and then I'm sure you can come with the best sort of advice for them. But no, I would not shell off it. I would list right now because the inventory is quite low.
All right. Next question from Sylvana Sacoli. Do we know what the market share split is of an A lender versus a B lender?
Unfortunately, I don't have that information, but I do believe 5 years ago, the A lender, which we call them banks, Royal Bank, Scotiabank, CIBC, TD, they used to have over 57% of the market share. But in the last 5 years, mortgage broker industry has really captured a good market share. I do believe now the bank and the mortgage community are almost sitting at about 35% each. And there is no such a thing with the mortgage community. Let's say Home Trust, as a primary example, they're not a B lender. Many of these B lenders, became REIT or mortgage syndication, and they are quite competitive to the bank. They actually are very competitive to the bank. If the bank is offering, let's say 1.5, 1.6, maybe they offer 1.7 by 0.1 different. Desjardins, for example, is one of those institution that really is capturing the market share.
All right. Next question comes from Jennifer Tai. What is the outlook for areas in the West like London, Sarnia, Windsor?
London is one of the hottest market in the province due to the employment. Insurance companies, medical center, university. It's a big hub. And again, working remotely from home, many west end of the GTA workforce, such as from Mississauga area, Brampton area, which they were hub of the small manufacturers, they are actually residing in London, Ontario. And it is quite healthy and quite robust. And also London, remember, London, Kitchener-Waterloo, the tech hub, plus also the cross-border employment that is happening a lot in that region. So as far as I know, Jennifer, it's a quite a hot market.
Next question is from Nim Musa. How long do you think the seller's market will continue in Ottawa, and when do you think we will go back to a balanced market?
I Tough question, Nim. But what I see the indication, if everything depend on the vaccine management, if we do the vaccine management properly and we reopen the economy, the seller market will continue till probably sometimes mid 2022. Because what's going to happen if we manage the vaccine, we open the economy, then the feds and the provincial government, they will be in a celebratory mode. Everybody is going out that basically want to spend the money. And then you will see the other policies start to sort of become priority. And one of those policies would be, how can we control the real estate market? So frankly, balanced market is, I've been doing this for 26 years. The balanced market is the market that we as a company, we love because it's more predictable than a seller's market. But if we don't manage the inventory issues, and if we don't, even after the opening of the economy, if we don't manage the inventory issues, we will be on a seller market. I have a feeling more that when the economy reopen, and even if the Fed pay attention to the policy of the housing, we will basically swing back and forth between the balance and seller market, depend on the area.
Thanks, Steve. Next questions from Ari Zadigan. How do you see our market for pre-construction properties when they come to registration? Will they be easily appraised, or should our clients budget for more down payment at this point?
Definitely budget more for the down payment. There will be at the point, who is calling the OFC for the stress test? The five major bank. The five major bank now reach a point, they look at their portfolio, how much risk they have. Yes, they got a stimulus package from the Fed through the CMHC with the mortgage bond, but the last 14 months has been so fast. Now they are looking at the risk and they want to mitigate any future damages. So you will see there will be a point that the appraisal will show less, and perhaps with the pre-con, it could be more prudent, because with the housing, the appraisal right now, the transaction is immediate, in a 60 or 90 days closes. If any effect or changes within the market, within the lending or appraisal going to happen, it will definitely impact the pre-con, because it's a 2 or 3 years closing from now. So my answer to you would be yes, ask them to at least have at least a 5% additional liquid asset in terms of the closing if they need to have.
All right, we got a few more questions here. Next one is from Adrian Vanderwall. Don't you think with 40% thinking prices will rise, 21% staying the same, and 39% thinking price will drop represent total confusion in the market as opposed to confidence?
Uh, yes and no. Who create the confusion? The confusion is created by media. That's why we have a job to really show them the historical pattern. Right now, for the last few days, you're so right. The confusion is, oh my God, the stress test is expanded. Look what happened in 2017. Look what happened in 2018. But nobody ever talk about what happened in 2017 and 18. 13% price drop compared to the peak of 17. If you do a graph of the last 50 years, even 10 years historical in Canada, you will see, particularly Ontario for sure, the price had always a positive gain. Ottawa is an interesting beast. Ottawa historically, because is in a government town, stability of an employment is amazing there. Up to 2016, because it was missing that interprovincial migration, those investors, the eyes of the Torontonian going there. So you had always 2 to 3% growth, never had a drop. And now take a look at it. It has a major increase on those prices. So the confusion is created by the media, not by the survey is being done. Consumers, they deserve that everything by professional realtor to be explained to them. And that's why it's quite important that you understand the trends in the market, the behavior of the market, and the ingredient that can impact our market negatively or positively. What I see more right now, a positive impact versus the negative impact. Unless tomorrow morning the government wakes up and come with the draconian drastic measure into our market and just basically halt the market, which frankly I doubt it. That means the collapse of the economy for Canada.
Great. Two more questions. Next one's from Armin Partash. As a home builder, do you think I should wait or jump, I'm guessing, to buy a tear down after June, or buy now, knowing knowing buying around 100 to 150,000 more than the market value? The whole rebuild process will take 18 months.
Again, back to stress tests. Last time, the stress test helped the upper end investors because their purchasing power is a much more better in terms of the negotiation ability to help them actually, versus, and I think it's going to be the same thing this time. A tear down or infill lot, the activity has been a little bit less because those sort of luxury inbound immigrants that they were coming here, they are not coming at the same rate. I would basically look at, I always look at this. If you are an investor, either you are short term or long term. By the sounds of it, you are a short term because you want to tear it down, build a property, and flip it. So therefore, doesn't matter you buy before June or after June, as long as the numbers make sense and allow a 5 to 10% adjustment for yourself, go for it. So find the right product, right property, and use your negotiation skills and get it done. But always, if you are a short-term investor, remember, if the market corrects itself or adjusts itself, ask yourself this question: can I carry the property for maybe a period of 8 months to 18 months? And if the answer to that is no, don't be a short investor. If the answer is yes to that, go for it, because the worst thing for you is you cycle it for a further time that you can basically sell it at a higher profit.
All right, and the last question actually is kind of two-part. It's coming from Shadi Azar, and the second part's from Sharon McLaughlin. And Shadi asked, oh, did I just lose this? Will there be anything announced on April 19th by the federal government that will slow the current market, i.e., speculation tax? And on top of that, Sharon asks, any possibility that the blind bidding in multiple offers being addressed? I've heard that mentioned several times now by economists.
Uh, A speculation tax is already there since 2017. So foreign tax and a speculation tax. The speculation tax is not announced, but technically, if you flip a property, is a capital gain. So it is there. And the CRA really has a string policies and approach towards it because they confirm it through the land registry, through multiple sources, and many people got caught with it. So in terms of the open bidding, I don't think so it's going to happen. As much sometimes we love our privacy policies, or sometimes it's actually hurting us. I think the privacy policy in Canada would not allow such a thing happen. And I think our regulatory bodies, Real Estate Council of Ontario or many other regulatory body, they're going to have a major issue in terms of the open bidding because it's not an easy process. It truly requires a proper system to be conducted, to be fair to everyone. Everybody right now, Sharon, just talk about ideas. How can we stop it? How can we stop it? It's very interestingly, nobody talks about the supply. Let's assume the open bidding start. The only open bidding, the only benefit will be, right now there is a discussion out there. They said, oh, if the 10 offers comes, 3 of those offers suddenly are offering a massive price over the asking, and the other 7, they are not even close to those top 3. So the open bidding benefit will be at least everybody will be on the same level. But if it's still a bidding, what is the meaning of the bidding? Meaning they will buy that property over asking price. Instead of maybe now we saw the record 110%, maybe they buy it at 105%. When you could manage to buy that property at the price that it was offered or 5% below it, which is a nice balanced market, then I say we address our situation. Open bidding is not going to address our problem. Open bidding actually in many countries actually create fueling to the market and is not the best and safest practice, because how do we know how the open bidding from the listing perspective is being performed?
That's it, Steve.
Thank you very much, guys. Stay safe, stay healthy, and life is beautiful. And look forward for the next quarter to talk to you again during the next quarter with another market report. Thank you.